The report showed that Malaysia has maintained its leadership position in the global Sukuk market in 2020 by commanding a market share of 45.1% of the global Sukuk outstanding. Sukuk, often referred to as Islamic bonds, Sharia-compliant fixed income capital markets instruments, have steadily increased their share of global markets over the past decade. The global market for Sukuk has seen considerable development over the past 10 years, with a number of high-profile corporate issuances and a number of sovereigns tapping the market. Sukuk are financial products whose terms and structure comply with Sharia with the intentions of creating returns similar to those of conventional fixed income instruments are like bonds. The issues on Sukuk that have been mentioned lead to a discussion of the challenges and solutions that can be taken to face any eventuality or to maintain performance. First and foremost, the issues that have been taken from this report is that the domestic Sukuk market in Malaysia continues to serve as an important and attractive platform for government and corporate entities to raise long-term funds for various economic, business and infrastructure development needs. The report noted that the progressive development of the Islamic financial ecosystem in Malaysia contributes toward enhancing the dynamisms of Sukuk in facilitating cross-border financial flows. This is including the sustainable finance space to achieve a more balanced sustainability and inclusive growth for the global community. However, this issue continuous innovation in the Sukuk market, particularly in the areas of environmental, social and governance goals that play roles in developments of the Sukuk market in years to come.
I'm going to talk about the challenges of Sukuk. The first challenge is regulatory development. In the Gulf Cooperation Council countries, the regulatory framework for securitization is not yet developed. This is due to the fact that one of the main legal challenges is the restriction on foreign ownership of certain assets in GCC. The huge demand for finance and the growing popularity of Sukuk as a mainstream asset class among fixed income investors in Asia and the Gulf is pushing countries to establish their regulatory frameworks. Malaysia is working to cement its position at the head of the Sukuk market by attracting global issuers and investors. The next challenge is the complexity of Sukuk structure in the market. The global financial crisis drew attention to the dangers of highly complex structured products. Many complex products are suffering significant downgrades and defaults during the financial crisis. The complexity of Sukuk structures may continue to discourage participation from many investors and any issuers who suffered from loss before.
Firstly, market makers can improve market liquidity. As we know, lack of liquidity is perhaps another reason why the yields in the Sukuk markets are significantly higher than in the bond markets. Apart from this, structural changes need to be introduced. For example, market makers need to be appointed to create liquidity in secondary trading. Second, establish a centralized Sharia authority. This authority will oversee the standardization of legal documentation, Sukuk structures and Sharia rulings. This will create more certainty among investors, hence lifting demand for Sukuk. Lastly, a public awareness program is a way to educate the public, especially the masses, whose small savings may add up to a lot if they are convinced by the usefulness of the instruments and made aware of the significant higher risks of Sukuk securities. The banks and organizations in Malaysia needs to beef up their promotion effort despite Malaysia being one of the major Islamic financial markets.
According to Navid Mohammed, there are a few important differences between Sukuk and conventional bonds. Firstly, Sukuk indicates asset ownership, whereas bond indicate a debt commitment. Second, a Sharia-compliant asset must be used to back a Sukuk. On the other hand, any asset, business, project or joint venture that complies with local legislation can be financed using bonds. Furthermore, Sukuk are priced based on the value of the asset underlying them, whereas bonds are priced based on the issuer credit rating. Next, Sukuk can appreciate in value as the value of the assets rises. However, profits from bonds are riba since they correlate to fixed interest. Last but not least, when you sell a Sukuk, you are also transferring ownership of the assets backing them. On the other hand, the selling of bonds is the sale of debt. Throughout the world, a substantial number of wealthy and observant Muslim investors are looking for a way to earn a respectable return on their investment while still being religiously compliant. Because of this, Sukuk has become a popular alternative among Islamic investors. The most essential thing to remember is that any financial organization or individual, regardless of their religious background and faith, can invest in Sukuk.